Hello everyone and welcome to our new video. This time I will talk about dollar yen and the correlation with stocks, and the reason why I'm looking at the dollar yen, well, there are basically two things. Now, the first, we have some very nice and powerful Elliott wave structure, and with the recent lows here, with the recent break to a new low, as you know, yesterday after the USCPI data came out, it's 2.5%. Well, this current low makes a drop from that July highs in 5 waves. Now that's a very significant and important, because in Elliott wave structure, whenever you want to make sure or spot a change in trend, you should see 5 subwaves. Okay, it's not important if that's on a daily chart, weekly chart, monthly chart, 1 minute, 5 minutes, 1 hour chart, because Elliott waves are fractal. But important is that the sentiment is spotted, a change in sentiment, when you see these 5 waves down. So these 5 waves down now tells me that the market should see even more weakness, but after a rally. Okay, so you can see this is the basic structure, okay, of this. Let me just move this here a little bit. Okay, so that's the basic structure of the Elliott wave pattern. You have this 5 waves down and then ABC correction. And even in a smaller scale here, you have 5 waves down where market turns, and then you see a 3 wave correction, then you see market moving even lower. So that's key. Okay, we have now 5 waves down. So we have first leg, first sequence, which tells us that most likely this market that make 5 waves down will continue even lower after some rebound. So with that being said, I think that this rebound could possibly show up in the next few months. Keep in mind that Bank of Japan, Japan in general, they brought dollar yen quite quite low compared to the levels that were just a few months back. So maybe now the market will stabilize a bit. I'm certainly convinced that they are quite satisfied with this reaction lower, so they will not maybe trying to bring back on the table some intervention, some things, because that would not make sense at these levels. So I think that maybe now will be a time for some pause. And whenever we get this pause, what should be important to observe on a wave B rally, on a free wave recovery. And ideally, this will show up from 147 for 140 area. That was the swing high back from 2023 and actually 2000 July 2023, and then you have December of the same year. So this whole zone could be interesting. Maybe market will stabilize here. So why this is important? Well, because if we will see some rise here on dollar yen, if that will have some positive impact on other yen crosses as well, then this could possibly mean that there will be some more risk on environment for the next few months. Okay, so if we see Japanese yen that will hit resistance, okay, and then Japanese yen will possibly see more weakness, then it means that stocks could rise further, because there would be not carry trade would not be that important if you see stocks moving to the upside. Okay, so in such case, what I would expect is that stocks, the S&P 500, all major indexes, which are quite strong, could possibly even continue higher to new all-time highs. Okay, but the question is, what will happen? Okay, when we have this dollar yen completing this corrective wave B rise? Well, that's going to be very important. I think very important risk of signal could show up once we will have this free wave rise here for a wave B, because then the next sell-off should occur after that bounce, and this sell-off obviously means that Japanese yen could strengthen, and this can be because of the safe haven approach, because market will be investors, traders will be going out of stocks. Now, what will be the reason for this? No one knows. Okay, but I just trying to follow the cycles here. And to give you one reason why I think that this could be the case and why these correlations are important is because here, when we have this first CPI that came quite significantly lower here back in July. It was the report for June. And back then, as you know, we got this also at the same time Bank of Japan made an intervention on the FX market. So they took advantage of the momentum of this direction. They knew in front that the CPI will lower, so will soften. So of course, market bet that Fed will cut rates, dollar dropped. And at the same time, they used this momentum, okay? They intervened in the market, so they pushed markets even further and even more stronger from that highs. And since then, as you can see, market is in a downtrend. But notice what happened, okay? At the same time when this happened, well, the Nikkei also dropped, as you can see here below. At the same time, the Nikkei moved to the downside. At the same similar period, this because Nikkei has seen a strong move to the downside. This has had an impact on the other global markets as well. So the S&P 500 major indexes, all of them moved even lower. Okay, and then even extended to weakness in August after this non-farm payrolls report for July, when there were some recession fears. So whenever there will be some new recession fears, any kind of economic indicators will show this. You will possibly see another sharp drop on stocks, and at the same time, you should be very careful, especially if Japanese yen would be showing some strength before this will happen. Okay, so what I think it may happen here is that whenever we get this bounce on dollar yen, let me try to illustrate this. Whenever we get this bounce on dollar yen, then we see potential more weakness after, as I said, wave B rally. That's at the same time when we can see a new reversal to the downside on Nikkei. Maybe Nikkei will not even reach new all-time highs here, but other major global indexes like the one in the US or in Europe could actually reach new all-time highs, because keep in mind DAX is not that far away, S&P 500 is not that far away, because all of those, especially S&P 500, lost from the recent highs only 10% or so. But here, if we take a look on Nikkei, well, that was much more aggressive drop, like 30% drop. So definitely, whenever we see dollar yen in rise here, that's when stocks could once again move even higher. But once we will see dollar yen hitting resistance, trying to complete this wave B, maybe later this year, maybe it's start of 2025, and if at the same time we will see S&P 500 trading at new highs, maybe close to 6,000, who knows? I think that this will be important timing when these cycles could change and when potentially much more risk of sentiment can show up, especially when Japanese yen could strengthen much further. Okay, but for now, as I said, these are some cycles for, let's say, for the next few months. But for now, it looks like that we could stabilize here a little bit, maybe in the next few weeks for dollar yen. If we see bounce and Japanese yen comes down across the board, this could be good for stocks. Traders, thank you very much for your attention. I hope that you enjoyed this video, and please make sure to visit us at wavetraders.com, where we will update you on these markets each day. Bye.